It's 9 a.m. in Hong Kong and Singapore, 10 a.m. in Tokyo. Greater China markets are shut today, but you are watching The China Show, and I'm Annabelle Droulers with Rebecca Choong Wilkins.
Our top stories this morning. Asian stocks fall further while treasuries gain as President Trump's tariff war sparks recession fears and a flight to haven assets. The dollar is under pressure with a Bloomberg gauge dropping the most on record.
But the president is downplaying the market sell-off and saying he's open to lowering tariffs if other nations offer something phenomenal in return.
Also ahead, Trump says a deal to spare TikTok from a US ban is within reach, with multiple investors involved.
And
I'm Chevian in Seoul, outside the Constitutional Court. In less than an hour, we'll get the ruling about the impeachment of President Yoon, and security is tight. You can see behind me, protesters are out in force.
And just actually kicking off with what Sherry was saying there, it's clearly a very, very loud and active background behind her in Seoul today, but we are on the countdown to the court verdict on President Yoon's impeachment motion, and certainly that could be something that plays into market sentiment. But, I mean, it goes without saying that, you know, yesterday was Liberation Day. Some on Wall Street are saying it's not Liberation Day, it's basically Obliteration Day, because we saw a really serious market sell-off overnight that's translating again into Asian sentiment this morning. So you've got Asian stocks that are down across the board there in Japan, Korea, Australia, for instance. Also taking a look at what's happening across assets as well, because the Treasury yield, again, we saw those tracking back down to around that 4% mark. The greenback under pressure as well, and tracking what's happening in oil very closely, because not only are we getting these concerns around recession on the horizon, but also, in addition to that, we saw OPEC Plus unexpectedly increasing their supply by 3 times the amount that was planned in May. So again, supply glut fears also in focus. But the big impact to Asia has really been those questions around the China Plus One strategy, and we saw tariffs being levied on Southeast Asian nations in particular. Let's take a look at how some of the markets are coming online today for another session. So Singapore, for instance, Malaysia, again, we're another day in the red for these so far. It's going to be really interesting to watch as well, because it's very volatile trading. But not only that, you've got the US jobs report coming up later today, plus a speech by Fed Chair Jay Powell. So it's going to really be setting the tone for some of these markets. What could, I guess, help a little bit is that traders still have room to digest, or time to digest, all of these tariff announcements in other places in Asia, because a lot of markets are closed today. Mainland China, Hong Kong, Taiwan, if you take a look at some of those in focus here today. So again, a bit more time to sort of assess. Indonesia, for instance, again, we did see a pretty sharp reaction there yesterday. But again, going back to what we saw in the US moves on yesterday in the session, we had the S&P 500, the NASDAQ, their worst day since 2020 for each. And also when you take a look at small caps in the US as well, that plunged nearly 7%. So it's really a concern, or concerns that are being felt here, that Trump's tariffs are going to really end up having a big impact on the US economy.
Yeah, absolutely. Seeing those sort of gyrations across markets, there is this perhaps potential, or this question mark over whether traders are willing to enter into another really wild day of trading, as we saw yesterday. Perhaps even a fragile, very fragile tentative rebound might be on the cards a little bit, particularly with some of those markets out, and particularly with the less liquidity, at least in Asia, ours. But President Trump still defending his tariff program despite a stock market meltdown. Let's just take a listen. Trump saying that he believes that the economic turbulence will eventually settle, defending trade barriers as a way for the US to negotiate.
It depends. If somebody said that we're going to give you something that's so phenomenal, as long as they're giving us something that's good. For instance, with TikTok as an example, we have a situation with TikTok where China will probably say, we'll approve a deal, but will you do something on the tariff?
Let's bring in Chris Weston, Head of Research at Pepperstone Group, joining us from Melbourne this morning. And Chris, great to have you back on the show again.
Thanks so much.
I like what you said in your note about to cries of it's not so bad that we had yesterday in Asia. Actually seems like it really could be this bad.
Yeah, I mean, we can see that in the volatility markets now, where 1 month put volatility is trading at an 8-fold premium to calls, and 1 week implied vol in the S&P is trading just over 8 vols to 3 month, for example. We're seeing that, and the fact that gold was down, shows that for the first time in a while that really throughout this period in the Nasdaq 5% decline and the S&P that people were getting liquidated. There was a lot of false selling. This idea that we haven't had panic selling going through the market this year. I think this was the day that we did see some of that, and as well, some of these profitable positions had to be liquidated. So, treasuries are firmly as a hedge in the market again. That really came into light on Friday. But before that, treasuries weren't working as a hedge in the portfolio. But we're seeing strong demand in treasuries. Real rates are falling, and the dollar's got a crisis of confidence in the short term in that situation as well. So, I think we went home yesterday. There'd been a bit of a bounce in S&P and Nasdaq futures. Obviously, Asian equities weren't so bad. So China was pretty flat ahead of the holiday today. But obviously what we've seen transpire in parts of European equities and obviously in US equities and across broad markets with OPEC pushing oil down on a cross-asset basis, it was a very ugly day. So, I had a lot of people, a lot of clients saying, it's not so bad. We've seen a nasty reaction on the open on the futures, but it's come back a bit. I think people are now saying the market's spoken out here.
Chris, obviously worse than expected for some, and we have seen, as you say, sort of a day of panic selling. But the expectation now is that we enter into a period where various countries are going to try and adjust the tariffs, and we're going to end up somewhere slightly milder than when we are. I just want to ask how you think markets react to that period. What is the tolerance and what is the resilience that they have for what could be quite an extended period of negotiation now?
Well, they need to get it. They need to get something through before the 5th, and depending where they're tariffed, obviously the 5th and the 9th of April. So there's a fairly tight deadline. We've already seen some countries coming out and appealing to the Trump administration, try and push that timeline back, try and give them a bit more of a reprieve for negotiations before those obviously more extensive tariffs come in. I guess the good news for a lot of people is we probably know the worst case scenario in terms of how we price risk, and we price some sort of certainty around this. So we've probably got a worst case scenario to work with, and that caps. And certainly that's the case in the US as we go into earnings season. We kind of have an idea about how this potentially plays into outlook statements. But I mean, what we're trying to model as well is behaviours. We're trying to model demand, consumption, inflation. All of these factors are very difficult to do, and with a moving target. Makes life even a bit more difficult, which is kind of why we've got volatility where it is at the moment. People, when you have that inability, that poor visibility to price risk, then of course the outcomes change, distribution changes, and people have to markets have to wear a higher volatility, and that's kind of where we are at the moment. So I think we have been given some sort of a silver lining or some sort of hope. Scott Besson mentioned it in US trade. Trump saying this phenomenal deal. So there is scope to work with something there. And I think some of these smaller economic nations, some of the smaller nations, especially in Asia, have been given some very, very high tariff rates. There are not really any kind of strategic importance to the US. They've probably got a bit more leverage to work with and try and lower some of those rates. It doesn't really impact the US in great capacity there. So maybe they've got some room to work with. But of course, the market on a more holistic basis is really focused on China's response and Europe's response here. And that's really the two big elephants in the room. And certainly China, we've got a tendency from them really not to come back with countermeasures until those tariffs have actually been imposed. So that's going to be on the 9th of April. So their response is still key. But I think there's probably a bit of scope for some of the smaller emerging markets who've got some incredibly high tariff rates to work with and try and appeal to the Trump administration there.
Yeah, but I think Cambodia, Laos, they kind of stood out yesterday as being ones where it's almost like, why do it in the first instance? But you mentioned the earnings outlook and you mentioned inflation as well. Even with the amount of uncertainty we have, it does seem kind of clear deterioration on earnings expectations, increase on inflation expectations.
Well, we did see, the inflation expectations is a tough one because, we did see short-term inflation swaps, 1 and 2 year inflation swaps, zero coupon swaps, having a ridiculous move on the open, up 27 basis points in 1 year, but that came right back. And while they were a little bit higher, I wouldn't be surprised now if they roll over a little bit in the short term, because people are looking more at the demand side here and how that feeds into price pressures and elasticity of demand and all those factors. But I think the Fed will be looking more closely at the sort of medium to longer term inflation expectations, 5 year inflation swaps, and they were lower. And I think that nothing I say is that when you talk about markets, the right move. When you say what's the correct move, I would say that inflation expectations on the longer term have come down a little bit, in line with what we've been seeing in a lot of the other markets there as well. But I think on earnings as well, what we've got, $276 as EPS on a blended forward basis. You take that down to 250. You put a 21 multiple on the market. Well, the market's trading around that for the moment. But if you put a 21 forward multiple on the market, and you've got a fair value on the back of the envelope calculation of just sort of 51, 5,200. So it feels to me that the market is still trading X downgrade, and I feel that needs to happen going into earnings. We've seen a number of companies obviously coming out with earnings downgrades prior to this tariff announcement, but from a fair value perspective, it feels 51, 5,200 is probably the level that we come to once we get those earnings downgrades.
Chris, just quickly before we let you go, the dollar, your outlook, does this really finally kick that dollar strength story? What are you expecting through the end of this year now?
Well, right in the short term, this is a real rate story and relative rates and relative growth story. So the US is at the heart of the problem. For me, the dollar really moves on China. If we're not going to see dollar CNH, dollar CNY move up as a result of depreciation, and the dollar stays fairly firm against the Chinese currency, that's a negative for the US dollar. The other factor right now is that real rates in the US have obviously been coming off very sharply of late. Weston wants that lower, and as long as real rates in the US continue to fall relative to its G10 peers, which is the case at the moment, there's still a very strong correlation. Then the dollar's there to be sold on rallies, and I think that's the right trade. So with the US dollar at the heart of this, and let's not forget, we're all after a circuit breaker. We're all after the Fed to come into this. We know it's a fiscal problem. And until we get that certainty, I think the US is at the epicenter, and we're trying to price risk and economics, which is still hard to do. So, I'm a seller of dollars at the moment. Obviously, the payrolls number is very, very key, and Powell's response. But as real rates in the US fall on a relative basis, and growth is the concern, I'm a seller of dollars against most currencies there, certainly against the yen, Swiss franc, and also the euro.
OK, Chris, excellent to have you this morning breaking down that very latest. That's Chris Weston, Head of Research at Pepperstone Group in Melbourne. Back now to the fallout from President Trump's tariff announcement. Let's get the very latest from Bloomberg Senior Editor Derek Wilbank. I mean, Derek, let's just start with some of the comments that we've had from President Trump justifying those tariffs. And I suppose the question is, to what extent are they consistent with actual sort of real tangible action? Of course, we've gone back and forth with President Trump over whether or not these tariffs would be as widespread or as painful as we thought. Looks like, in fact, they are much uglier than some were expecting.
Yeah, look, the message out of the White House, now that they've seen a day of market reaction to this and stocks pretty much everywhere in the U.S. absolutely taking a bath, was short-term pain for long-term gain. The White House is trying to basically say that this is, the analogy they're using is a very sick patient that needs an operation, gets worse in the short term but gets better in the long term. The idea being that if you stay with this for long enough, that things come back to the United States, and that will make for a renaissance, and the stock market goes up and everybody will be happy and singing and dancing. We shall see if that happens. Right now, obviously, it is coming in, I think, worse than a lot of people in the markets expected. It is still, I should stress, short of the maximal levels that Trump was promising during the campaign, but far worse than people were pricing in. I do have to highlight here, this was a very confused rollout in a lot of ways. You know, you've got pictures on your screen of Trump putting up a board talking about tariff rates. Those rates were different than the ones that were put out in the official White House annex of tariff rates that were going to go into effect for, at least on that board, he's holding 6 different countries, or 14 in all, and then that rate was revised back later so that it matched the chart. You can go down and look at the way that the calculations are put out. They focused on trade deficit, not on the tariff and non-tariff barriers. The trade deficits were used as a proxy for the tariff barriers, all sorts of those things. And we've got a great TikTok sort of out now that sort of like goes into great depth on how all of this came together, that I'd encourage everyone to take a look at.
Yeah, certainly the way in which it was calculated has drawn a lot of varied reactions, I guess, but some of them not, you know, that positive, and calling it basically a very crude way of making the calculations. But there's also the question, of course, of the economic pain that this is going to generate for everyday Americans. And now there's also a way that the Trump administration is possibly looking at paying for that or offsetting it, and it could be further taxes on millionaires.
Yeah, you know, this is one of the things that the White House is looking at in terms of the tax plan that's going through, right? Remember, part of the tariff idea is as a revenue raiser, that it's going to help offset some of Donald Trump's domestic policy priorities. Now, Trump wants his big, beautiful bill, as he's called it, to extend the tax cuts from his first term, to pay for more that he had promised, like no tax on tips, things of that nature, as well as to fund parts of his domestic agenda that he wants to get through on energy, on infrastructure, on border security, of things of that nature. So that is all still to come. The White House has signaled that they might be open to allowing top tax rates on the very, very highest to go through. That's going to be a very difficult lift in a Congress where most Republican lawmakers who are elected have signed at some point a pledge to not raise taxes on anyone in any form ever. So that will be a very difficult dance to get through. If anyone can whip Republicans on something, it's Donald Trump. But that, you know, that is going to be a significant complication for that to get through. I also think that, look, this is a president who throughout his first term told people when they were concerned about how he was going about doing things, the tone in which he was taking, to say, look at the stock market, look at your 401ks. He cannot say that right now in his second term because the market is on net down and down a lot from when he took office. So the White House is banking a lot on the idea that this is pain in the opening months that may get resolved you know, as we go through and into the midterms, because if the markets are walking into the midterms in November of 2026, where they are now, that's going to be a major political problem for this White House. So this is a White House that has been receptive. And I would also highlight something that the previous guest had mentioned. There was a lot of concern among U.S. trading partners about where some of these levels landed in respect to where they thought that they ought to be. Israel pulled off barriers, for example, and still got slapped with tariffs anyways. There are a couple of days, if negotiations are possible, for those to take place, and let's see if there are any adjustments. It's an open question about whether there will be any at all.
Derek, really great to have you on this morning. That was Bloomberg senior editor Derek Warbank there in Singapore. And still ahead, we're going to shift to the focus to South Korea, where impeached President Yoon is awaiting a court ruling on whether he can stay in office. And a reminder as well, markets in Hong Kong, mainland China, also Taiwan today are shut for the Qingming Festival. So no trading, but we do have the offshore yuan there. Again, just moving a little bit against the greenback, but it has been the dollar story of weakness. This is the China Show. Taking you to Seoul now, you've got some live pictures here where we're seeing gatherings of supporters of President Yoon. If you're just waking up this morning or catching up to the news in South Korea, essentially the Constitutional Court there is due to rule in the next hour on the case against impeach President Yoon. He won't be attending that hearing, but the verdict will certainly decide whether he's reinstated or removed permanently from office over his short-lived martial law decree. Let's get now to Sherry An in Seoul, and Sherry joining us live. Sherry, we know it's very noisy where you are right now. It's quite difficult for you to hear us maybe, but just tell us the expectations that we have for today.
Yeah, you're right, Annabelle. It's really loud around me. You were just showing pictures of some protesters. Those were in support of President Yoon, but right now I am outside the Constitutional Court, surrounded for protesters that want the impeachment of President Yoon Suk-yeol. Behind me, about 300 meters behind, is the Constitutional Court. They have a barricade of about 150 meters. Then there's a stage. We were actually near the stage, but they asked us to move farther away so the people could gather and sit around the court as we await the decision in about 40 minutes' time. Over in front of me is Choong, another area that's prone to get political protests, and a lot of people, as you can see, out in force. The expectation right now not clear because we've had both presidents impeached with those decisions upheld but also overturned. Upheld in 2017 for President Park Geun-hye and overturned in 2004 for President Do Woo-hyun. What's clear right now is that we are seeing a leadership vacuum. We are seeing political uncertainty. Now, the market's a little bit differing on their predictions of what could happen next, depending on the outcome in about 40 minutes' time.
Sherry, thank you so much for joining us on the ground there. That's Bloomberg Sherry An in Seoul for us. And of course, you can also turn to your Bloomberg for more on this story. Go to TLive Go to get commentary and analysis from Bloomberg's expert editors.
Yeah, and as we do get that ruling from the Constitutional Court in the next hour, we're going to be discussing the fallout of it with the Centre for Strategic and International Studies. So we'll have that guest as well coming up in the next hour, Ellen Kim joining us. But we'll have plenty more ahead. This is Bloomberg. You're watching The China Show, and it's absolutely day 2 of market reaction to Trump's latest tariff announcement coming through. So it has been that big move in the bond space overnight and that flight to safety, essentially, that we're seeing. So continuing in the session today, we've actually seen 10-year yields, or JGB yields, essentially slumping for a second straight session. Haven demand, it's playing into the Japanese currency as well, and some analysts are saying, you know what, even 140 is possible in the near term. Commodities-wise as well, it's been a very sharp reaction to these rising expectations that recession is on the horizon, again off the back of these Trump tariffs. And again, you're seeing that reflected Brent crude very much because OPEC Plus, I mean, they've really stunned the oil market with their policy switch.
Yeah, meanwhile, a little bit of reprieve perhaps for some Asian markets. We do have some closed markets, mainland China, Hong Kong, Indonesia and Taiwan. A little bit more time to sort of calibrate and react to what we're seeing. There's plenty more ahead. Stay with us. This is Bloomberg.
China has repeatedly stressed that there are no winners in trade wars and tariff wars, and protectionism is not a way out. China urges the U.S. to correct its wrong practices and resolve trade disputes with all countries, including China, through consultations based on equality, mutual respect, and mutual benefit.
Chinese Foreign Ministry spokesperson Guo Jiakun there. And we're also seeing some strong reaction to Trump's tariffs on Chinese state media. Here's just a quick look. The official Xinhua news agency is out with a piece titled "Tariff War, a game of drinking poison to quench thirst." Sort of popular Chinese analogy there in the title. It blames the US trade deficit on structural economic problems, including its low savings rate and a lack of infrastructure investment. The piece says, quote, "Letting others take medicine will not cure your own disease. Simply punishing trade partners through tariffs cannot solve the real economic challenges you face." Xinhua also saying that the US protectionism won't bring back manufacturing, but will only weaken innovation, market vitality, and accelerate its economic decline.
Yeah, and Trump's tariff announcement has also sparked some nationalistic comments on social media. So some of the posts that we're seeing on Weibo, for instance, let's fight back. China should impose 1,000% tariffs on US products. Another person saying, you know what, this is not such a big deal. We don't have much to buy from them, but they can't live without us. And then another one as well saying that Trump wants manufacturing back, but without a complete industrial change, US manufacturing won't have any competitiveness either. Fitch, meanwhile, has downgraded China's key sovereign debt rating, reflecting a diminished outlook for public services and debt levels. Let's bring in our Chief North Asia correspondent, Stephen Engel. So, Steve, is it sort of any surprise that we got this downgrade from Fitch?
Well,
overnight?
it's good timing, obviously. The assessment by Fitch of the fiscal situation in China and the rising debt levels, which we saw outlaid at National People's Congress, where they're going to raise the fiscal debt ratio to GDP from 3% to 4% to kind of help boost some debt levels, obviously, to spur a recovery and to hopefully spur domestic consumption. And this assessment by Fitch came before this latest barrage. But clearly, the Trump administration had been telegraphing this, so we could see that this is going to pose more severe shocks and stresses on the Chinese economy, which is export-driven, obviously, with a continued crackdown on property and that diminished returns there. And we're seeing as well, first of all, let me just get to the news of Fitch. The sovereign debt rating essentially from A+ to A. And China's Ministry of Finance has come back as well, like we heard from Ministry of Foreign Affairs. They're blasting this as being a biased assessment and not reflective of reality. The reality, according to a number of economists we've spoken to, including our own Choong and others at Bloomberg Economics, saying the tariffs are worse than their own worst-case scenario and will crush exports, their words, and dent growth at a time the recovery in China is quite fragile, obviously. But we also heard from Citigroup saying it could knock about 2.4 percentage points off GDP this year. Other banks, Goldman, BNP Paribas, Societe Generale, ING, OCBC, say that hit to GDP growth this year could be between 1% to 2%. So what can they do? Well, Goldman economists are saying China would need to increase fiscal spending by close to 2 trillion yuan to offset the dent to growth from the Trump tariffs. Robin Xing, Morgan Stanley, everyone's weighing in on this, right? A U.S. tariff shock would be significantly higher and more pervasive this time than in the previous Trump trade war in 2018, 2019. There's the direct impact of cumulative 54% plus the legacy tariffs, but also the indirect impact as global growth will likely take a hit.
And actually, just on that point, I think we had Goldman yesterday as well. Their expectation going into it was 20% tariffs for China. So
an additional 20 plus 20.
Yeah, so it's
40.
not really that much of a surprise, I guess, but...
Yeah.
Although, you say that, but for some, thinking about SocGen, Barclays, they talked about raising significantly their expectations, but they're still quite a ways under some of the upper limits that we have actually seen imposed on some of those countries. So there will be quite a radical, which we've already seen.
I mean, a lot underpriced it, and then you see that shift off the back.
And we'll have to see what the policy response is going to be and what the retaliation is going to be, because they say they're going to retaliate. We don't know what that is going to be and if it's going to become a tit for tat. But what other policy moves are they going to do? I mean, I talked to Huang Yiping, a key advisor to the PBOC last week at Boao. He says there's still many levers that they can do when needed. But again, we might want to circle the calendar to later this month as well as in July when the Communist Party's big policy-making or decision-making body, the Politburo, meets. That's likely when you're going to see some sort of concrete policy response, not only to the tariffs, but to the symptoms that have caused the Fitch downgrade.
Right, mark your calendars. Bloomberg's chief North Asia correspondent, Stephen Engel there. And President Trump says the US is close to a deal to spare social media app TikTok from a ban, with multiple investors involved in the discussions. Let's bring in China correspondent Min Lo in Hong Kong. Look, we're just 2 days away from this potential shutdown. TikTok has now become this key point of leverage when it comes to any kind of China-US deals. What do we know is the very latest?
Yeah, so actually tomorrow TikTok could face a shutdown if the deal doesn't come through. Although Trump doesn't seem too urgent about it, he has said that he is confident he will be able to secure another extension if necessary. But we know that he's met with J.D. Vance on Wednesday. J.D. Vance is, of course, in charge of finding a buyer before Saturday. And we know as well that Amazon had put in a last-minute bid. But we understand from sources that the top contender is still a joint venture between Blackstone and Oracle and some other investors. And they're planning to take a 50% stake in ByteDance in TikTok, leaving ByteDance with just a 20% stake in the U.S. operations. The other 30% will stay with the existing investors. And of course, Oracle will be able to provide a sort of security guarantee over the security of those U.S. data. And when it comes to the algorithm, though, we understand that that will likely be left in the hands of ByteDance, which will then license it to the new U.S. venture. So a couple of hurdles still remain because, number one, we don't know if ByteDance and the Chinese government have been involved in these talks so far and whether they will approve of this deal. Although Trump has said he's willing to lower tariffs as a sweetener to Beijing, there's also the idea of whether that algorithm being left in the hands of the Chinese would face any opposition in Washington, given that the 2024 law had indicated that China and ByteDance should not have any control over how that algorithm is managed.
Yeah, it certainly moves away from the original issues that lawmakers had with the app. But at the same time, we've actually got a really interesting Bloomberg scoop on this and how TikTok possibly is using its data or where it's shipping data to from the EU. So how is this also likely to complicate things?
Yes, so we're hearing from sources as well that the Irish Data Protection Commission could be announcing this by the end of the month, a 500 million euro fine on TikTok for sending European data out to China to be accessed by Chinese engineers. And this is a multi-year investigation starting from 2021 and isn't the first time that TikTok has faced such a penalty, because back in 2023 they got a 345 million euro fine for mishandling sensitive young people's children's data. But bear in mind, though, that TikTok isn't the only tech company that has been in focus, because the biggest fines handed out by the same commission was handed out to Meta, to Facebook, and to Amazon as well. But it does complicate matters given that divestiture deadline, because some analysts say that the U.S. buyers will then have to inherit thousands of these lawsuits that they estimate TikTok faces, and that could come up to billions of dollars in litigation costs. So they will want to factor that into the price of the sale, or maybe extract some form of guarantee from ByteDance that they will be footing the bill for these litigation, the risk of exposure there.
All right, the clock is ticking once again. Yet another countdown, but as we said, the US possibly close to a deal. That was Bloomberg's China correspondent Min Lo there, and we're going to leave you here with some live pictures out of Seoul again. We are seeing supporters of President Yoon that are gathering, and importantly, of course, we're counting down to this decision from the Constitutional Court. They're going to be ruling on the fate of President Yoon. That is, as I said, expected to come in the next hour. So we'll have the reaction to that. Our anchor Sherry Ann is on the ground. We've got guests as well that are lined up. So more ahead. This is Bloomberg. President Trump says he wants to use big fees on Chinese ships to reboot U.S. shipbuilding. The plan has the potential to turn the economics of global trade on its head. Bloomberg Originals has been taking a closer look at China's dominance in shipbuilding and the implications of Trump's proposal.
Your bike, your couch, your kids' toys, even your car most likely crossed an ocean on a ship. And those ships, just like a lot of the stuff they're carrying, were very likely made in China.
China is by far the world's largest shipbuilding nation.
They have the steel, the aluminum, the parts, the components, the final assembly. China owns that infrastructure.
Around 34% of all the ships that are currently on water were made in China. At the same time, about 57.1% of ships currently under construction are at Chinese shipyards.
Its share of ships produced globally grew from less than 5% in 1999 to over 50% in 2023. Not only does it dominate in shipbuilding, China also has vast controls over the wider ecosystem. Today, 95% of shipping container production is owned and operated by China.
A single shipyard in China now produces more ships every year than all of the American shipyards combined. Think of that. And it was a business that we used to dominate.
Donald Trump, having already started a trade war with China, has ideas about how to even the playing field.
We are also going to resurrect the American shipbuilding industry, including commercial shipbuilding and military shipbuilding.
Donald Trump is doing a lot of things to try and reposition the US in the world, tariffs, for example. These new measures are about a reset of the relationship with China.
Such a reset would have far-reaching consequences, potentially altering the landscape and economics of global trade. So, what's behind this push to bring shipbuilding back to America? And is it even possible?
This is a particularly American obsession at the moment.
Once upon a time, the US was the predominant force in shipbuilding.
The real high point for US shipbuilding was in World War II when they built these ships called Liberties. They built a few thousand of them, and they really helped to keep the Allies in the fight against Nazi Germany. They supported supply chains and they were critical. What that did was create a very large shipbuilding capacity in the US.
But the world has changed a lot in 80 years.
US shipbuilding began to decline after World War II. By the 1970s, Japan was really taking over. By the 80s, Korea had joined, and by the 2000s, China had joined. And today, really, those three countries are everything.
China has been slowly building up its power in shipbuilding over the years, but it's only in recent years that it's overtaken South Korea and Japan as the world's top shipbuilding nation. In the 2000s, China joined the WTO, and from there on you can see the economy growing, which really generated a lot of demand for ships. In Beijing's 10th five-year plan, it actually came out with a vision for growing China's ousts and also shipbuilding industry. So that really laid the foundation and focus for its manufacturing sector, for its labor force to really rally around this vision of creating a globally competitive shipbuilding industry.
Given the size, the scale of the way that China manufactures, this made sense. They were already very good at heavy manufacturing of things like steel beams and bars.
It has a really strong domestic economy that is export-oriented. At the same time, China has a really highly skilled, highly educated, but relatively cheap labor force en masse. And these are the hands that you need to build really sophisticated ships.
The government then helped support shipbuilding as a strategic sector for them to move into as they tried to upgrade from basic manufacturing into more and more sophisticated products. And that sort of initial push of government plus the beginning of an infrastructure then becomes a reinforcing cycle. The more that you create ships, the cheaper each one is.
That is in stark contrast to the US, which has been exporting its manufacturing jobs for decades.
The US, like most advanced industrialized economies, is mostly a service economy. Manufacturing at the moment in the US across the board is only 8% of total employment. A China-built container ship is somewhere in the order of 55 million, and the estimates for a US-built comparable ship is more like $330 million.
That price difference explains the massive disparity in ship production. Between 2020 and 2022, China produced over 4,000 new ships, while the US produced exactly 12. In 2024, the US built 0.01% of the world's commercial ships. The Center for Strategic and International Studies reported that one Chinese state-owned shipbuilder built more commercial vessels by tonnage last year than the entire US shipbuilding industry's built since the end of World War II.
The problem with shipbuilding is that it's very capital intensive, it's very labor intensive, It requires a whole infrastructure of support. So if you want to move into large-scale production of very expensive, very sophisticated ships, then those are typically accompanied by significant subsidies.
And that is where China's centralized government can really thrive. Between 2010 and 2018, China's government's broad support for shipbuilding totaled $132 billion. And that number doesn't even include other forms of support, like directing state-owned enterprises to offer low-interest loans, debt forgiveness, and equity infusions.
If the United States wants to go in that direction, it would have to provide some kind of subsidies to make it commercially viable for firms to make that transition.
You're effectively going to have to subsidize an industry that isn't going to make any money and is going to cost the taxpayer money.
Donald Trump wants to raise revenue needed to boost ship production by way of fresh levies on Chinese built, owned, and operated ships.
The fees start at $1 million per docking, and they go up from there. So it could be $1 million, it could be as high as $3.5 million for every time that a China-built ship docks in the United States.
And it goes beyond that. Any ship owner that has any Chinese ship in its fleet will also likely face these taxes.
One industry expert went so far as to call the proposal a trade apocalypse, potentially making American goods more costly, driving up freight rates and inflation, and diverting trade away from US hubs.
That is going to drive up the cost of goods. So costs on the whole will go up as a result of this policy.
Extreme levies could cause a ripple effect in US supply chains as well.
Ships will reorient their current routing, and they will make a lot fewer stops in the United States. The distribution of goods could change. You'll do a lot more road and rail between ports instead of moving goods by ship. The policy of the Trump administration so far has been to go it alone. America first, America alone. But if you want to go from basically very limited shipbuilding to full-on finished container cruise ships, that's a huge jump. So perhaps the better policy would be, what part of the supply chain do we think makes sense for U.S. manufacturers to be in, and how are we going to support them in that transition from not being involved very much in shipbuilding to being much more actively engaged?
What the US does have are two strong allies, South Korea and Japan, with the capacity for greater output. But the push for US shipbuilding dominance isn't necessarily profit motivated. There are broader security concerns with allowing China to have a maritime edge.
So this is really a story about geopolitics, how the US views shipping as a key national security strategic resource, and how it's using that to broaden its influence in global trade routes.
Security argument says, doesn't it seem like a problem that the United States cannot build ships on its own? And doesn't it seem like a problem that we are dependent on Chinese-built ships to move goods around for the United States? But there's also overlaying that is a sort of new Trumpian arguments about the importance of heavy manufacturing in general.
The focal point on shipbuilding right now might just be part of a much wider strategy by Donald Trump to move everything around geopolitically. All these tariffs are happening. These are huge charges that he's proposing. So you have to frame it in the much wider conversation of what's going on with US politics right now. I don't think anybody's really imagining a grand restoration of shipyards in the US. The countries that have shown they can make money out of shipbuilding, China, Japan, Korea, are so dominant that it's hard to ever see a return to the way things used to be.
And subscribers can watch more documentaries from Bloomberg Originals on the terminal and, of course, on Bloomberg.com. And if you are a Bloomberg subscriber, you can catch up with all of our interviews by using our interactive function, TV Go. You can also join the conversation by sending instant messages to our team and our guests during our live shows. Please do go check it out at TV Go. There's plenty more ahead. You're watching The China Show. This is Bloomberg. And we're set to get that ruling from South Korea's Constitutional Court on the potential dismissal of impeached President Yoon there. We've seen supporters out in force today, as well as, of course, a gathering of anti-Yoon protesters in Seoul. I mean, kind of incredibly dramatic scenes here, Belle.
Yeah, but it is a while in the making as well. And you think about all the turmoil that short-lived martial law decree unleashed, not just politically, but also in the markets as well, and coming at a very difficult time for a lot of countries, but including Korea, who's now having to go up and think about how they're going to be negotiating with the Trump administration to try and repeal some of these tariffs that are in effect. So certainly this decree is going to be watched very closely. I mean, is he going to be permanently removed from office or reinstated? We will have that decision coming very shortly. And in the meantime as well, you can also get the T-Life for commentary on it.
Yeah, that's a really good point on this inability or perhaps curtailed ability to react to Donald Trump's tariffs. Of course, we have this very short window to really push and advocate for various countries. South Korea, somewhat on the back foot here. But there's also, of course, these deep divisions domestically at home. Whatever the result is, it's going to be a real uphill battle now, trying to sort of unite the country and trying to just move on beyond what we've already seen.
Yeah, because as you say, I mean, public opinion is very split on which way it should go today. And the Conservative Party, the opposition, what we understand is basically neck and neck in polls, and even though the opposition has gained some momentum. But if we do get that decision and it is to remove him from office, polls as well saying that Lee Jae-myung could be the next leader of the country. But as we said, that decision coming up very shortly. You can also go to T-Live Go to get commentary and analysis from Bloomberg's expert editors as we await it. More ahead with guest reaction in the coming hour.
Taxes and deregulation were the three-legged stool, and right now the focus is on tariffs.
As things stand now, we're headed to recession, and it's very clear that this is a tax on businesses and households.
The U.S. is known for the innovation and the stuff we create, and I think it's exceedingly burdensome for small companies like ours.
In the next couple of months, the labor market still stays okay.
As the adage goes, if the U.S. is going to have a slowdown, other regions probably are going to be worse.
Some of our guests speaking about Trump's tariffs there, and really, I mean, we've heard these increasing calls for recession on the horizon, and we can get to those in a moment. But in terms of the market reaction today, it's the second day of selling off. I mean, it was the worst day for US stocks going back to 2020 for a lot of the main gauges, and you're still seeing US futures that are in the red this morning. But broadly, you see Japan down there nearly 3%, topics off nearly 4%, Kospi trading fairly flat. I mean, we do have the Constitutional Court ruling coming within this hour. That'll be on whether impeached President Yoon stays in office or not. So maybe just a little bit tentative in the meantime. But what else we're tracking is the story in bond markets as well, because you've continued to see, here we go to the Constitutional Court here as we await that impeachment verdict. As we said, it is due within this hour. It's going to be something that really we could see perhaps a market reaction off the back, given how much turmoil came in. But also, if we do get him ousted, it will mean a decision or an election that needs to be held within the next 60 days.
Yeah. Absolutely. And there's a bit of a question mark as well, continuing over who's going to represent South Korea when it comes to negotiating with President Trump's tariffs. A somewhat curtailed ability because of this domestic turmoil at home. They've somewhat been hampered. And there is a really sort of short timeline to try and get some kind of reprieve negotiated with the US.
Yeah, that's right. It really comes at a very tenuous moment for Korea that is facing hefty duties, as we see across a lot of other Asian countries. But the decision at least does sort of give us a chance to move forward in Korea as well, because it has been such a leadership vacuum in the country, and also really a populace that's very divided on which way the court should rule as well.
Yeah, absolutely. Deep sort of domestic divisions in South Korea too. Our co-anchor Sherry An is in Seoul. She's joining us live. Sherry, maybe we can just start with what are we actually expecting today?
I can barely hear you right now because we're actually listening to the court decision as it's happening. Behind me, there's a big stage and there's also a big screen. So we are trying to ascertain what exactly the Constitutional Court is saying right now. But I'm surrounded at the moment by protesters that want President Yoon to be impeached. Right now, we continue to listen to the judges in the Constitutional Court. 6 out of the 8 judges right now need to vote to oust President Yoon in order to permanently remove him from office. Of course, we know that 5 of them are right-leaning. We know that 1 of them has also been directly appointed by President Yoon himself. So we continue to listen to what the judges are saying right now when it comes to the validity of that impeachment of President Yoon carried out by the National Assembly.
Yeah, and Sherry, on that, I mean, we're hearing from the court that they're saying that martial law declaration is subject to judicial review. So, as you said, we're awaiting the announcement. What is delivered today and which way it goes? I mean, we could see a leadership contest triggered within 60 days.
If President Yoon's impeachment is upheld by the court, then we're expecting snap elections within 60 days. Of course, he also faces a separate criminal trial on the martial law declaration, on insurrection charges that will start in 2 weeks. So even if he were to remain in office by this vote from the Constitutional Court, he would be pretty much a lame duck president. At the moment, we continue to listen to what we can expect here when it comes to what's next for the country. We know that acting President Han Duck-soo has already talked about scenarios that he's preparing according to how this impeachment vote goes. If the impeachment is upheld, then he will give a public message. He will order authorities and the police force to be on alert. He will try to manage the country as well as possible as the snap elections take place within 60 days. If President Yoon is reinstated to power, Prime Minister Han Duck-soo is said to be giving a report directly to President Yoon about state affairs. You can hear right now around me protesters that want President Yoon to be removed cheering intermittently as we keep hearing more about this decision.
Sherry, to your point there about the protesters, you know, it is a sign of the deep divisions that we've seen in South Korea around, of course, this political drama. Lay out what some of the challenges are going to be regardless of what happens and, you know, some of the economic consequences of all of this political turmoil.
We have already seen a very difficult situation for South Korea. Of course, we're talking about the U.S. reciprocal tariffs of 25% plus a 25% auto tariffs that the country is facing. With this leadership vacuum, who takes the lead in negotiating for better terms has been a key question. We have seen the Bank of Korea already downgrade the economic forecast for this year to 1.5% from 1.9% earlier this year. Now, if the impeachment is actually upheld and the president is removed, there are a bit more optimistic forecasts about what happens to the economy, especially given that the opposition-led National Assembly could actually pass a larger supplementary budget that could support the economy. That would allow the Bank of Korea to focus more on financial stability and give it some leeway to slow down those rate cuts at a time when we have seen price increases surprisingly accelerate in the month of March. Now, if this impeachment vote is rejected, then we could see more political gridlock. As I mentioned, the National Assembly is led by the opposition party, so there is a lot of questions of what happens next if a lame duck president stays in power.
Yeah, and Sherry, just take us back into the courtroom again. We do have proceedings that are starting. For people that are just joining the program now, what exactly are we expecting to happen in the ruling today?
We're expecting the votes coming from 8 judges. In fact, I'm surrounded by protesters that want President Yoon to be impeached. They were yelling 8-0, 8-0, because they wanted all of the 8 judges to vote in favor of the impeachment. We know that 6 out of the 8 judges need to approve the permanent removal of President Yoon for him to be ousted. Right now, we're hearing some of the measures and some of the issues that the Constitutional Court has reviewed, including the fact that they are now reviewing whether President Yoon violated the law, and that violation was serious enough to remove him. Of course, a key question has been that the declaration of martial law, as unconstitutional as it might have been, according to analysts, is how seriously unconstitutional it was. Was it serious enough to remove him? We've seen in both cases in the past from former presidents of South Korea. President Park Geun-hye was removed in 2017, while President Roh Moo-hyun was reinstated to power in 2004. So how serious this violation was is right now a key question the judges have been trying to determine. Right now we're hearing from the court that the martial law declaration is subject to judicial review. We continue to listen to what it means for the actual impeachment vote passed by the National Assembly to be either upheld or voted down.
And Sherry, let's talk about the market reaction that we're seeing, because the Kospi here, for instance, also the Kosdaq are standing out today because they're actually moving higher. And we are seeing as well the Korean won there leading gains against the greenback, which has been under pressure over this tariff news as well. But how are investors likely to respond to this, particularly if the decision to impeach President Yoon is upheld?
The Korean won has been the worst performer across Asia this past year. We're talking about 8% losses against the greenback. And yes, I've actually been surprised to look at the market reaction today as well. Rather optimistic on a consequential day here in South Korea when it comes to political turmoil, when it comes to the future of politics here in South Korea. Analysts are expecting the Korean won to strengthen towards that 1400 level if the impeachment is upheld and President Yoon is removed. And we can actually get an election within 60 days that would actually lead to perhaps the front-runner, the opposition leader, Lee Jae-myung, to come to power, which could potentially mean a larger supplementary budget, which could boost the economy, which could bring in some more stability to the markets. We could see bond yields rising because of the larger fiscal spending. On the other hand, if we do see President Yoon staying in power, that would mean more uncertainty, more political gridlock. Right now we're hearing that the Constitutional Court sees a series of issues around impeachment against government officials, and that's raising concerns. But there's only 2 cases pending at court when Yoon declared martial law. So we're trying to understand right now what the Constitutional Court has decided and how they're voted when it comes to President Yoon's permanent removal.
Yeah, we are seeing some of that reaction coming through in markets, also in the credit default swap premium. We'd already seen quite a steep upward trend. That's one of the areas where we have seen reaction quite concentrated. The country's 5-year CDS premium now exceeded 40 basis points on Thursday yesterday. It's a level we haven't seen since January. So at least that marker indicating some of the uncertainty. Analysts also separately saying some amount of short covering and dip buying of Korean equities this morning on expectations that the court will indeed uphold the impeachment of Yoon. So perhaps could trigger a short-term rally in some of those South Korean assets. Let's wait and see. But certainly that's what some of the market is pricing in in and reacting to.
Yeah, and it's interesting, actually, on that point. I think Mirae Asset Securities has got an interesting call out saying the Kospi actually could rise to the 2,600 level if the impeachment case is upheld. So you're implying a near 8% gain from where we are today. And this is a benchmark, of course, that's very sensitive to recession fears, to geopolitical tensions, given not just the heavy weighting of tech, but also that very high correlation alongside Taiwan to how US benchmarks fare as well. In terms of what we're hearing from the court as well, you can see these proceedings are ongoing here, but we have heard the court saying that you cannot say that Korea was in an emergency situation before December 3rd, that the martial law did not meet the conditions set by the Constitution as well. So again, we're awaiting this verdict as to whether it will be an ousting of President Yoon or not. This was a martial law decree that was very short-lived, declared at the end of December, or in December of last year, rather, and then it's been all of this turmoil since deciding whether he could legally stay in office or not and what would be next for him as well.
Yeah, I mean, to your point, nonetheless, despite that short-lived nature, the court also saying that Yoon did deploy troops in order to disrupt Parliament, which has been a sort of key issue here over the purpose and intention of why, in fact, that was rolled out.
Yeah, and let's go back to Sherry Ahn now, who is standing on the ground for us, awaiting this verdict from the Constitutional Court. And Sherry, just recap these lines that we're hearing so far. Right now, it does look like perhaps the impeachment could be upheld.
유리창을 깨고 공간 내부로 들어가기도 하였습니다. The Constitutional Court now saying that you cannot say that Korea was actually in an emergency situation before the martial law declaration on December 3rd. So you could see protesters here actually cheering. They want to see President Yoon removed. We're outside the Constitutional Court as we hear from judges that the martial law didn't meet conditions set by the Constitution and that the president actually deployed troops to disrupt Parliament. That's a key point in whether or not this was anti-constitutional. President Yoon has denied so far any wrongdoing and said that the martial law decree, the first in over 40 years, was necessary in order to carry out state affairs. He said that this was in order to save the country, protect free democracy, normalize state functions. Right now, we continue to hear about the ruling when it comes to other officials in the Korean government during the martial law declaration. But at this point, we're seeing more cheering here and anti-Yoon protesters as we're seeing the court talk about how some of those measures that the president carried out were not necessary and did not meet the conditions set by the Constitution.
And Sherry, just to pick up on this as well, we're getting more lines coming out from the court saying that Yoon's cabinet gathering violated procedural law and also that he ordered troops to drag out lawmakers. So, again, we're getting more lines on this, but what is next if this impeachment, rather, is upheld by the court?
If the impeachment is upheld by the court, we will have snap elections within 60 days. We know right now the front runner is the opposition party leader, Lee Jae-myung. He's also been acquitted on a separate trial about election law violations just last month. So if he runs for president, there's a higher likelihood that he will win. If we get a President Lee Jae-myung administration, then policies could change dramatically, especially when it comes to relations with the U.S. and also relations with North Korea. Usually the Democratic Party has been more willing to speak to Pyongyang and more skeptical of the alliance with the United States, as well as a partnership with Japan.
Sherry, again, we're getting more lines here saying that Yoon undermined the parliament's activities and also that he dispatched troops for his political purpose. Again, it does seem like the judges appear to be in favour of the parliament's move to impeach President Yoon. Irrespective of the outcome, he still faces these civil court proceedings as well. What's next on that front?
President Yoon Suk-yeol faces a separate criminal trial, which will start in about 2 weeks on insurrection charges. We know that he's denying all wrongdoing, that he's defending himself. He's actually been pretty defiant in the 6-week process as we awaited the Constitutional Court's decision. But we know that he has that separate criminal trial upcoming. And if he's found guilty, he could face life in prison or less likely, though, the death penalty as well. The ruling People Party have said that they will adhere to anything that the Constitutional Court decides.
And Sherry, let's actually just take a look at the market reaction as well, because it's really standing out so far in the Asian session. When you've got this day two tariff reaction that's rolling through markets like the Nikkei, for instance, the Thorbecke down around 4%. Korea actually has reversed earlier losses, is now trading positive. You're seeing the Kospi, for instance, trading around a session high. The Korean won as well, really advancing against the greenback here. So markets do appear, and investors to be liking what they're hearing so far from these court proceedings that are still underway. And just getting another alert saying that the martial law declaration did violate the Constitution.
When it comes to the market reaction, really could also be the fact that we are trading those valuations. Korea faces the so-called Korea discount with low valuations. We know that semiconductors, for example, have been threatened by tariffs coming from the United States, but the likes of, say, SK Hynix, which is a leader in this sector, only trades at around 5 times 12 months forward earnings, as opposed to, say, TSMC in Taiwan at 15 times. So there is something to say about the valuation levels of South Korea at a time when we're also seeing more optimism around government reform. At the same time, of course, the Korean won. On the other side, we have seen, as you mentioned earlier, the dollar plunge in the overnight session. We could see a little bit more strength if we see that impeachment upheld. Bloomberg Economics thinks that we could get towards the 1400 level against the U.S. dollar, but perhaps not surpass it, perhaps more limited than the market reaction that we saw when Park Geun-hye's impeachment was upheld in 2017, given the broader economic environment.
Sherry, while we wait for a bit more clarity on that final decision, I'm just noting the court is saying that, again, reiterating that Yoon violated the Constitution and the rule of law. While we wait for that decision, just tell us about some of the sort of limbo that South Korea has been while it waits for this result. We did have Pete Hesketh, for example, delaying his trip to South Korea. We do have a trade minister from South Korea planning to head to the U.S. shortly. But, of course, will be in less of a position of strength given the uncertainty that's happening at home. So there have been very tangible impacts to South Korea's ability to sort of do foreign policy here.
And it was really not surprising when we had U.S. Defense Secretary Pete Hesketh make his Asia tour and actually skip South Korea, right? They said it was because of scheduling issues, but the fact remains that we haven't had a leader here in South Korea since December of last year when martial law was declared for only about 6 hours, then lifted, then the president was suspended, and now we have the Constitutional Court trying to review what happens next. So we are expecting this decision to have implications on the future of South Korea and who leads the country, and perhaps bring more clarity on who can actually negotiate with the United States. Remember that 25% new reciprocal tariffs in South Korea are about, they could risk about 50% of exports to the U.S. When it comes to total exports of South Korea, that's about 20% that could get hit. Bloomberg Economics now saying that in the medium term, that could be an impact of 1% of South Korean GDP. So we continue to watch the repercussions and the fallout on the broader economy as the Bank of Korea has already downgraded South Korea's growth forecast to 1.5% from 1.9% earlier in the year. The Bank of Korea has struggled to really balance the different dynamics at play here. We're talking about not only the fact that growth is slowing, but inflation unexpectedly accelerated in the month of March. So you have CPI dynamics, not to mention rising house prices here in Seoul, a plunging Korean won, or at least under more pressure than before. And you have a central bank governor who's had a lot of challenges in trying to walk a fine line between supporting the economy and really watching financial stability.
Sherry, it does look like the court is perhaps leaning towards upholding that decision. Just talk us through, for those who are just joining now, talk us through who actually could become the next leader of South Korea if we do go ahead and see President Yoon's impeachment upheld by the court.
Right now, the front runner in the opposition Democratic Party is Lee Jae-myung. He's holding about more than 40% support ratings, according to the latest national polls. Now, trailing him is also the current defense minister of the ruling party, but we're talking about national polling showing single-digit support only. So the likelihood right now, if we do get that election triggered within 2 months, is that Lee Jae-myung could become the next president. What that will mean for policies is what we're watching. The expectation is that the Democratic Party is usually more in favor towards redistributing wealth across South Korea, pursuing those equality measures. Universal income support has been talked about. Also, the fact that they're more keen to speak to North Korea. We know that President Trump has said that he wants to speak to the North Korean leader Kim Jong-un at some point. He said that he's had a good relationship with him just this week. So we'll watch if perhaps we see another summit like we did in his first term back in 2018.
Sherry, we're just getting more lines from the court here saying that Yoon's law violation is unpardonable, and also that Yoon shocked the people, he caused confusion in the economy. Today we're seeing people supporting Yoon, we're seeing people that are protesting against Yoon on the streets. Talk to us about the societal divisions that we see, and even if the leadership vacuum can be filled, is that rift going to be healed? We actually just got the decision, Sherry. The South Korea court has upheld the impeachment of President Yoon. That decision just coming through now, the Constitutional Court ruling and upholding that impeachment of President Yoon after he declared that martial law decree in December of last year. So, Sherry, again, this is triggering an election now. Talk us through this decision and what comes next.
You can see right now behind me all of the protesters who wanted to see President Yoon impeached have stood up. They're cheering, they're yelling. It's a celebratory mood behind me. The stage right back there, the Constitutional Court behind me. In front of me is Gwanghwamun. You have more demonstrators out in force. They're all very happy, cheering, chanting. Music has started playing now across. You can see the smiles very wide around people here in South Korea, in Seoul. What's next? The snap elections triggered within 60 days. That means that Korea will gear up to an election campaign that could also bring more political uncertainty. At least for now, as we've been discussing, we know that Lee Jae-myung, the leader of the Democratic Party that controls the National Assembly, is expected to win the election if it was held today. He's ahead of other contenders. And you can see just the cheering just around me by anti-Yoon protesters. But we know that in the past, despite all of the celebratory mood that you can feel at first, given that more than 40% of recent respondents to a survey wanted to see President Yoon impeached. We have the other camp as well that wanted to keep President Yoon in power. So we will still be on the lookout for any potential clashes on that front.
Sherry, yeah, you can certainly hear the level of celebration in the crowd that you're in right now. Just a couple of more details from that court decision. The South Korean court unanimously deciding to impeach President Yoon. The court also saying that the benefits from Yoon's removal do outweigh all of those losses as well, Sherry. I do want to follow up on Belle's question earlier. Now we know the result. What are some of the ways in which South Korea can start to heal some of those political rifts? What are we expecting to see from, the opposition party?
before from the ruling People Party that they would go along with any decision made by the Constitutional Court. Given how unanimous the decision was, perhaps it will lead to less political divisions. But as I mentioned before, we do know that there are supporters of President Yoon out there. Even back in 2017, I was right here at the Constitutional Court when President Park Geun-hye's impeachment was upheld, and we still had clashes by her supporters coming out in force. A handful of people actually died. So we'll be on the lookout for today when it comes to the political ramifications of what happens in South Korea. We're going to be watching the election season unfold. Opposition party leader Lee Jae-myung of the Democratic Party is a likely front runner at the moment that could become the next president of South Korea. We know that the ruling party has said that they would adhere to the Constitutional Court's decision. So at this moment, as we heard from the acting president Han Duck-soo, that he would be making a public statement as soon as the impeachment was upheld. We'll be watching out for that. We'll also be watching for any moves coming from authorities, from the police, to control the situation so nothing gets out of hand. What will be key in the next few hours, any sign of violence, is what we'll be watching for.
Sherry, I want to talk about the market reaction as well, because it's been quite sharp here, specifically in the Kospi. It was trading up ahead of the decision. Since then, it has reversed, and it's now trading 0.5% to the downside. The Kosdaq as well has given up some of its earlier gains. We are still seeing strength in the Korean won. But tell us how investors are likely to interpret this decision.
We had seen a significant rebound on the South Korean assets just leading up to this decision. So perhaps not surprising that we could be perhaps seeing a little bit of sell the news in this session, given that we have to consider that the risks are still there for this economy. We're still headed for another election campaign. We're headed for another presidential election. So we still will not have a clear leader for the next few months at a time when this economy is facing 25% reciprocal tariffs coming from the United States, 25% on auto exports, a huge industry for South Korea already taking effect this week. So perhaps not that surprising that we're seeing a little bit of that buy the rumor, sell the news sort of situation in the market. But analysts saying that at least there's a little bit more certainty when it comes to what happens in South Korean politics next if the opposition Democratic Party actually takes the move out. We could perhaps see a larger supplementary budget that could help support the economy.
Sherry, we're also just showing on the screen now some of the images from Yoon's supporters. A very, very subdued crowd. Really couldn't be starker difference with the cohort that you are standing with and all of that cheering. Yeah, absolutely sort of much more depressed background there, Belle, that we're seeing.
Yeah, that's right. And Sherry, to recap, just talk us through some of the societal divisions. Going into this ruling today, taking a look at the political polling, you can see the very sharp divide within the community.
Yeah, even coming up to this impeachment vote, we had seen a Gallup poll showing that 57% of respondents supported Yoon's impeachment, but there were also more than 30% that actually supported President Yoon Suk-yeol. When it comes to who could become the next president as well, we had seen that Lee Jae-myung of the opposition is still a leading contender. But interestingly, more than 40% of respondents also said that his acquittal last week of election law violations was a poor decision by that court, and the 40% who support that actual ruling. So, yes, political divisions, societal divisions, very strong here in South Korea. You talked about some of those President Yoon supporters who have also been coming out in force since the martial law declaration in December to support the president, to support the hearings at the Constitutional Court. But here, where I stand, just 300 meters from the Constitutional Court. Everybody's cheering for the court's decision upholding that impeachment.
Sherry, it's been really great to have you on the ground for us in Seoul this morning. As we said there, the decision just coming through that the South Korean Constitutional Court has upheld the decision to oust Yoon. That triggers an election. It is due to be called or held within 60 days. The market reaction to this has been quite stunning. We had seen Korean assets moving higher. Post that decision, it's given up some of the ground, and we actually see the Kospi turning back into negative territory so far this morning. Of course, Korea faces not just this election, they also have other issues at stake, and that includes, of course, these negotiations with the Trump administration and what exactly is next for US-Korea trade as well. But let's bring in Ellen Kim, Senior Fellow with the Korea Chair at the Center for Strategic and International Studies. And thanks very much for joining us on the program this morning. As we saw there, and as we've been reporting with Sherry on, the court has upheld this decision. President Yoon has now been ousted. Talk us through your reaction to this decision.
Well, this is, there's a lot of predictions about how the court was going to rule out. And some people predicted that this is President Yoon's case will be dismissed because of the previous case of the acting president Han Duck-soo was reinstated. And there was obviously divide among the judges about how they look at the impeachment case of the acting president. But turns out that the Constitutional Court upheld the impeachment today in line with what the Korean public's feeling about the impeachment cases. As you mentioned before, there is a higher percent of South Korean public supporting the Yoon's impeachment than opposes the impeachment. So I think that this situation actually pulls out South Korea out of the political stasis, but also at the same time, that does not mean that it's going to put an end to the ongoing political instability that we might experience as this country is going to go straight into the election mode.
Ellen, that's a really good point on the political instability that you're marking there. I mean, this morning we've seen really jubilant crowds, of course, celebrating as a backdrop to reporting from our colleague Sherry Ahn. But we've also seen Yoon supporters, some of them crying in crowds, very, very subdued there. And it speaks to these deep sort of societal divisions that we are seeing. To what extent is South Korea and South Korean politics now able to move on? What precisely does need to happen now to try and, to some degree, unify or at least move on with this decision? Are we actually expecting Yoon supporters to accept it, for example?
I mean, the ruling party indicated that they will accept the court decision regardless. But it's not clear that whether Yoon's ardent supporter will accept the decisions. And I personally think that there will be probably stage demonstrations in protest of the court decisions, which will make the situation of the political situation in South Korea a little bit uncertain. And also, as the elections go, as the country goes straight into election mode, we have to think about the leading candidate Lee Jae-myung's legal cases. Although last week we saw that appellate court cleared candidate DPK leader Lee Jae-myung of the election fraud charges, but he has other 4 cases ongoing. So a lot of the political forces will now move from the President Yoon to candidate DPK leader Lee Jae-myung's court cases, and there's going to be a lot of pressures, and then to look into that cases, and then I'm sure that the ruling party will also laser focus on that case as well.
We're just also getting some headlines saying that the South Korea Finance Ministry, the BOK and regulators will meet later today. Also that the South Korea ruling party PPP leader has apologized to the public as well. I want to talk about really the situation that Korea is in right now, a period of, I guess we're on the campaign trail, but you've got to look ahead to these elections to be held within 60 days. And the timing of that, given this is also the point at which Korea needs to be negotiating with the Trump administration over tariffs. how is that likely to be complicated by what's happening at home?
I mean, the President Yoon's ouster will help solve some of the internal divide and in the country, but at the same time, this prolonged the absence of leadership will be another problem for South Korea, as it's facing economic headwind from the current administration, as it imposed a 25% tariff yesterday on South Korea. And not to mention the tariff, South Korea also faces another problem, which is the country has been listed into the sensitive country by the Department of Energy. And there is another concern about South Korea. President Trump administrations are having pressuring not just South Korea but other countries about raising their defense costs, and there are many issues in the U.S.-RK relations that needs the leadership in South Korea to directly engage with the President Trump. But this court decision essentially eliminates the possibility, and given that South Korea will go into the election mode for another 60 days, that means that this is going to be a huge cost for South Korea, as it's going to lose a critical moment to deal with the Trump administration at the leadership level.
Ellen, in addition to that sort of negotiating position, what now are some of the major risks and challenges for South Korea? And what do you think the priorities are going to be for the next leader of the country?
I think that any leader, whoever comes to the president's office, the priority will be to seek an early summit with the President Trump, and then negotiated directly about some of the issues that are pending in the bilateral relations. And I think that the first priority will be to deal with negotiate the tariff with some of the investment packages, and also some of the areas that South Korea and the U.S. can cooperate, such as there are some critical area where two countries can cooperate, such as shipbuilding and the energy issues. So I think that there is going to be a lot of negotiation that will likely happen. But unfortunately, we have to wait until South Korea has a new president.
And for President Yoon, or impeached President Yoon, who's now been ousted, he's also facing civil court proceedings. So what exactly can we expect on this front?
I mean, today's decision actually will probably reflect that on his criminal charges on the insurrections. Although today's decision doesn't really deliberate on the insurrection charges, I think that this will impact on his criminal charges. And if he finds guilty, he could face a life prison.
Ellen, more broadly thinking about foreign policy implications here, what could this change in leadership mean for South Korea's relationship with China, its foreign policy stance, and of course its relationship with North Korea?
I mean, certainly this is going to be depending on who becomes a leader, but given what DPK leader Lee Jae-myung is the front runner, we might see some changes in terms of South Korea's foreign policy direction. With the vis-a-vis China, I mean, DPK leader Lee Jae-myung has clearly indicated that he would like to engage China and North Korea a little bit than the current President Yoon Suk-yeol did. And also, he indicated that although he supports the improvement of the relationship between Korea and Japan, he also indicated he stays firm on the historical issues. So that indicates that there could be some complication in the trilateral cooperation among the U.S. and Japan.
What about the President Yoon's party, the People Power Party, that has apologized to the public for this? Do you think that the PPP is going to be able to separate itself from the actions of impeached President Yoon?
I mean, if you look at the 2017 impeachment case of the President Park Geun-hye, at that time the ruling party basically collapsed and it dissolved, and then it led to the creation of several parties, and essentially they lost the presidential race. So what is different this time is that the ruling party actually rallied behind the president, unlike they did it before. So I think it's a matter of one factor that we might want to think about is how there's a significant anti-Lee sentiment in Korea. And now that President Yoon is ousted, how that will translate into the affect the anti-Lee forces and the moderates is something that we might have to see. And I think that as for the PPP, I think some of the candidates might start to think about how they're going to gather those votes. So I think that this might be a matter of how the party itself think about strategically whether they can win the race, whether staying together is a better strategy than going on their own like they did in 2017.
Ellen, thanks so much for joining us this morning as we, of course, unpack what the Constitutional Court ruling to uphold the motion against impeach President Yoon means exactly for the Korean political landscape, but also for its economy, markets, and also foreign relations with countries, including the US. But that was Ellen Kim there, Senior Fellow with the Korea Chair at CSIS. And you can also turn to your Bloomberg for more on this. You can go to TLive Go to get commentary and analysis from Bloomberg's expert editors. But leaving you now with pictures of those celebrations in Seoul. As we said, the court decision to uphold President Yoon's impeachment. This is a decision that sparks an election within 60 days, but it has been a unanimous one, which does say that he violated the Constitution, the rule of law, and the military's political neutrality. So the market reaction as well has been pretty sharp off the back, but we'll have plenty more ahead. This is Bloomberg. Welcome back. Just a recap of our top story now. This is South Korea's Constitutional Court that has upheld the impeachment of Yoon Suk-yeol over his short-lived martial law declaration. Now, this is a decision that paves the way for a presidential election that does need to take place within the next 60 days. So you're taking a look at some live pictures now out of Seoul and also how Korean markets are faring. And it's been quite an interesting morning because we saw markets moving higher in anticipation of the ruling. This is certainly a decision that gives some political clarity in Korea. Even though the election has been triggered, there has been a leadership vacuum in place as well. The Korean won, though, and equities as well, just giving up some of their earlier gains. We do see, of course, a second day of risk aversion, and this really relates back to Trump's tariffs. What could end up being a bargaining chip, at least from the Chinese side as well, the shifting to what's happening in China now, is this deadline on Saturday, and that's going to be for TikTok to divest its US operations from its Chinese parent. That's ByteDance, of course, or it could face a ban, but President Trump is saying that he's close to securing a deal to keep TikTok online. Our opinion columnist Catherine Thorbecke says Beijing will decide the app's fate in America. She joins us now from Tokyo. So, Catherine, this decision or the fate of TikTok very much being in Beijing's hands, we know that China would need to approve any sort of sale, but is there something else behind that you're inferring to in your column?
Right. So good morning. So what I think is really interesting is that, Trump has really gone to extraordinary lengths to promise to save this app in the U.S., sort of punting the deadline and in some ways going above the law and the courts and Congress, really. And I think the more he has publicly come out and said that he's going to save this app, the more power he's really yielding to Beijing. And, as you mentioned, we're inching closer to a deadline, and we still haven't, Trump has come out and said that he's very close to a deal, but we still haven't publicly seen any details of that when the deadline is tomorrow. And I think it's interesting because what we've seen from Trump is he's putting together this consortium of U.S. buyers. But really, I think Beijing will have the final word because of this export law that they have. And I think that, after he's kicked off this trade war, he's really yielded a lot of power. Xi Jinping and Beijing are really under no obligation to save the app for the 170 million American users. And the app doesn't even operate in China. So I think we've really seen sort of the tables turn here.
Catherine, that's a good point. Xi Jinping is under no obligation to save the app, but it has become this key point of leverage when it comes to discussing a potential US-China trade deal. It has become a sort of tool there. So just put us in sort of in context on what it potentially would take for Beijing to allow this to go ahead and an approval of a sale, and how is this context of it being a sort of a point of contention in these trade discussions, how does that factor into what the future of TikTok might be?
Right. So, you know, we've seen Trump come out and say that he would consider reducing some of the tariffs that he's put on China in order to strike a deal with Beijing. And I'm not sure Beijing would really see that as much of a deal. You know, Trump sort of kicked off this trade war himself, and him sort of lowering tariffs that he initially put on in the first place, you know, that doesn't seem like a great deal. And at the same time, I think Trump has been sort of obfuscating the national security concerns behind this law to ban the app. And he's sort of put it into his, you know, very chaotic trade agenda. And at this point, you know, it's almost sort of delegitimized some of those national security concerns in many people's eyes if he's using it now as a bargaining chip for his trade agenda. And so I think we'll have to see what Trump ultimately gives up. You know, for a long time, the sort of key question was, you know, what will it take for Beijing to let this go? And they had been, you know, very sort of opposed to a sale for a long time. But now it's really Trump that's holding on very tightly to TikTok.
Okay, Bloomberg's Catherine Thorbecke joining us from Tokyo there. Thank you so much. I mean, let's also just take a closer look at how China has been viewing the tariffs. We have seen some strong reactions on state media and social platforms as well. Let's bring in our China correspondent, Min Lo. I mean, let's stick to sort of state media first. What kind of response are we seeing?
Yeah, we're seeing some pretty spicy headlines on Chinese state media. There was one on Xinhua that was published yesterday with the headline, the U.S. is drinking poison to quench its thirst, which is a Chinese idiom. Essentially, the whole article was talking about how the U.S. is really extracting what it can from other countries in order to make up for all the problems and all the shortfalls in the U.S. economy, including the low savings rate, the lack of infrastructure investment, the abusing of these hegemony of the US dollar as the world reserve currency. And it's saying that these tariffs are not going to help the US because it's just going to shift global alliances, cause supply chains to shift, and just accelerate the decline of the US economy. And CGTN, another state media, also had another article with a headline saying, the world bully cries victim, and it has this very catchy phrase, tariffs hit, wallets quit. So again, talking about how the tariffs will lead to a rise in cost of living for American consumers and a rise in unemployment as well.
Social media as well, Weibo, for instance. What are people saying now?
Yeah, so as you would imagine, there is a lot of chatter on Chinese social media. Some people saying, you know, this would really mean that the Chinese government has to focus on the domestic economy. There are some pretty sarcastic comments as well. There's one user that says, well, then just, you know, make all the clothes, the socks and shoes in the U.S., but then can you guys afford it? Another user saying that suddenly it feels like Trump has helped created this formation of the anti-America coalition globally. Another user saying that Trump doesn't necessarily want manufacturing to return to the U.S. He just wants to wield this big stick to blackmail other countries into surrendering to him, to obediently buy up American oil, gas, food, weapons at high prices and sell to the U.S. whatever it wants at low prices. And I want to point out this particular chart that I took from the AI chatbot on Weibo, which analyzed people's comments, and it found that most people's reaction had been in terms of how they feel. Most reactions were feelings of disgust or loathing. Can we show that pie chart, please? And then some people are showing emotions of calm, words of encouragement, but by far, most of that sentiment has been negative. Can we show the pie chart? Do we have it? Yes. So there you go. That is the AI chatbot making my work easier.
51% disgust.
Yes.
Yeah, it is a pretty extreme reaction there.
Yeah, and certainly one that's in the majority. All right, that was our China correspondent, Min Lo there. And just as Min's been discussing or talking there, we are getting some breaking news that's crossing the terminal this morning. And this is in relation to the National Security Agency in the US. This is the powerful wiretapping and cybersecurity agency over in the States. But what the Washington Post is reporting is that the director of this agency, the the National Security Agency has been fired. That's according to 2 current and 1 former US official. So this is General Timothy Haig, who also leads the US Cyber Command. So we'll get more details on that as it comes to hand. But leaving you now with some live pictures of Seoul. This is following the court decision to uphold Yoon Suk-yeol's impeachment. We are as well getting some lines that are crossing from the opposition. DP Choong, who is saying that citizens rescued the nation. So plenty more ahead. This is Bloomberg. Taking you back to some live pictures in Seoul, the decision this hour for the Constitutional Court to oust President Yoon Suk-yeol that has triggered an election that's to be held within 60 days. We're hearing now from the caretaker government, essentially acting president, Han Duck-soo, saying that they will work on security and trade issues and they will as well manage the administration stably.
Yeah, we're also going to be expecting him to announce the date of the 21st presidential election officially by him during a cabinet meeting. So we'll be watching out for that as well.
Yeah, and just taking a look here at some live pictures, the Korea Opposition Party is giving a briefing. This is, of course, reacting to the ousting of President Yoon.